Good evening, everyone. Once again, this is Rakhi Gautam from greytHR, your moderator for the session today. Thank you so much once again for taking out the time and joining us. Today, the topic is top strategies for smart tax saving. Now, before I dive into the topic, let's do a little housekeeping on how this session goes. So the session is divided into two parts. The first part will be the presentation by our expert, which will then be followed by an audience Q&A. So the audience Q&A is where time is all yours. You can, in fact, start putting across your questions from now itself, and we will be happy to take that up towards the end. Also, as all the sessions, this session is also being currently recorded, and the same will be shared with you after the session is done. And this will also be available on our greytHR official YouTube channel under the playlist Parichay. So you can always go there and watch it for any retention that may be required. So I think we have the quorum with us now to start the session. So just give me a moment and we'll start. So as you all know, today we will be delving into key areas such as tax saving solutions, optimizing compliance processes, and selecting the most appropriate investment strategies tailored to your goals and capacity. We will also be delving into the social impact of HR strategies on personal finance and employee welfare. Additionally, we will also be discussing the importance of health insurance, innovative cost-effective solutions, and the role of employer-employee investment solutions in enhancing social security and employee retention. Of course, I said a lot of things that we are going to be discussing today. And to decode all of that and share his insights with us, joining us is Raju Joseph, founder and lead advisor at Synergy Investments. Let me quickly take you all through his profile. Raju boasts 25 years of rich experience in financial services, showcasing expertise across various asset classes. His proficiency lies in personal finance planning, retirement solutions, taxation, estate planning, and risk management. With a clientele exceeding 500 customers, Raju manages assets under management totaling over 200 crores in equity, mutual funds, debt segments, life insurance, real estate investment trusts, sovereign gold bonds, and more. His educational background includes a Bachelor of Engineering and an MBA from Christ University. Furthermore, he also holds certifications such as Certified Financial Planner, NISM Mutual Funds, IRDA, and NISM Equity and Derivatives. So I think we've gotten the perfect person today with us on board to discuss on this very interesting topic, and I'm sure this will be of interest to everybody joining us today, tax saving solutions. So now I think I can safely hand over the session to you, Raju, to take us all your insights that you have in store for us. Over to you.
Thank you, Rakhi. Good evening, all. Without wasting much time, let me move to the presentation right away. Can I share my screen?
Yes, you can.
All right. My screen is visible?
Yes, you can continue.
All right. Okay. Right. So good evening once again. We will be covering some of the important strategies towards tax planning activities at every organization. So I divided this into multiple parts where something which is related to the what type of strategies we should formulate and what types of programs we should conduct. And again, some of the products or services which is very essential in this aspect. So as Rakhi rightly said, so we will be covering the following points. First is about the compliance strategy for the tax planning in the organization, as well as how to frame the financial planning solutions. The second aspect will be the social impact. Okay, and I know it's a very probably a sensational word here, but HR strategy on personal finance and employee welfare do have a long-standing impact on the employees as a whole. The third subject which we'll be covering is one of the, again, a critical subject on the health insurance, All of you know, I mean, how difficult it is to manage, the so-called health insurance service in any organization, whether it is through GMC or without that, and what are the long-term impact of that. The fourth is an employee investment solutions, very critical for talent, retention, very critical for a top order employees package, because tax is an important component of anybody's overall CTC. So if something can be done through that, and this is a really an interesting area where we can save a lot of money. And the last point is about the tax-free pension solutions, as well as the NPS, the National Pension Scheme. So at this webinar, broadly we'll be discussing an HR strategy on tax planning tools. Is a program what actually we are conducting in every organization is the employee required tax saver investment training. Okay, that is the absolute product training. What type of tax saving instruments are available? Which are the best tax saving instruments? Do we require that type of training, or do we require a financial planning and investment guidance training? So in the second aspect, automatically the tax saver products also will cover. But the best part is in the financial planning and investment guidance training, we are actually making a roadmap for the employees for his long-term financial planning. Okay. Or at every organization should be formed a tax saving culture, an investment culture through regular savings, or a plan a smoother admin work in terms of complying the taxation requirement. So it will become very easy for to meet the payroll requirement or the tax investment declaration part. Now, the conventional way, what I've seen in most of the organization is to conduct one or two or a regular product training, how to select the best tax saving investment solution. That conducted nothing less than 100 programs, but then mostly everywhere a typical template has been given to us to train on the employees, which are the best tax saving investment solutions, and how we can save the section 80C investment related tax savings. But on the other side, if we strategize the program in such a way that we can make a strong foundation through a financial planning and tax compliance process from the very beginning, which will suit for various category of employees. So in every organization, we will have three buckets of employees: young and independent, middle age, and probably a pre-retirement phase. So when we are actually formulating the training programs, it has to meet these three age group or categories separately. So in most of the cases, the tax saving solutions may not be even applicable. So actually we have to design in future whatever programs we are designing is to meet the financial planning aspects with tax compliance. So while doing this, what we are advising is to segregate the overall program into two parts. The first part is obviously the requirement of the organization is to meet the tax compliance part. Okay? So or at the payroll level. So that's why I given here as two lists. This is the final objective. That the list number one, the people who opted for a TDS-based payroll from day one. And the list two is the list of employees who opted for an investment-based declaration or investment declaration-based payroll. Now, how this is arrived is the second part, which is nothing but the list one are the employees who opting for the new tax regime, where there is nothing, no declaration that we need to practically consider. We can straight away get into a TDS-based payroll, okay? Because there is not much of deductions are allowed, okay, other than 1 or 2 standard ones. In list 2, who opted is become the larger work where the investment declaration has to be collected. So once we educate our employees in view of what is the new tax regime, what was the old regime, what are the benefits of new versus old or old versus new, then this list preparation will become very, very important. So a lot of initial training and other discussions are required in terms of segregating these 2 lists. Then the other area is that the investment planning or the financial planning exercise also should be built in based on the investment goal as well as the net cash flow based investment plan. And why I am referring this point here is most of the people are refraining from investment or tax saving product by looking at the lock-in period, the liquidity aspect of it. But there are solutions for that. That's why we have to make the awareness for employees to understand this. The 4th construct is a very, very critical one. It's called the AAA benefit. Okay, so in any investment training where we are undertaken, most of the people are having only one concern is about the first E, that is the exempt. Okay, so it is this AAA means. So let's take the tax saver investment. Most of us are doing the ELSS tax saver. The ELSS tax saver, originally it was a AAA product. Okay? Means the amount what we invest is exempted up to 1.5 lakh rupees, and the investment is locked for a minimum 3 years period. This 3-year, whatever the growth is accumulated is also exempted. That is the second E. And at the time of redemption, the total amount also exempted. That is what it is called as a AAA benefit. Okay. Now, obviously, as per the latest tax rules, only a portion of your growth is the withdrawal is fully exempted. Up to 1 lakh rupee gain is exempted. Otherwise, it is taxed at 10%. So the AAA benefit, we have to really educate people. Then only they can choose the right product. There is no point only by saving at the time of entry and pay a lot of tax during the growth as well as withdrawal. Okay, I'll just quickly compare ELSS tax saver versus an FD. In FD also you can declare under section 80D. For an FD, the problem is a single E product. Only the exemption is given at the time of investment. The growth and the withdrawal is taxed. Now the part 2 is actually our job in terms of the training and development, how to formulate the program, how to execute that program. Okay, so as I sounded in the previous slide, that there has to be a segregation of 3 categories of employees when we are selecting for a workshop of this nature, because each stage, the goals, requirements, and as well as the need is different. Okay, and young and independent require a separate financial planning or investment solution. Middle age require another category, and a pre-retirement group require totally different solution. Now let me come to the area how HR strategy on financial planning or a tax saving investment will impact the social impact of these decisions. Okay. Now let's take a situation that an organization is largely chosen, the team is chosen on a new tax regime. So a new tax regime, the immediate impact or outcome is very, very few savings with the employees. Okay, whatever said and done in the past, and even in the present also, the initial steps of investments done by any employee is all forced savings. Okay, so tax saving instruments are the first saving most of the people does, or maybe our reduction in PF or other things. Okay? So it's all forced savings are actually the one where some starting of saving, investments is taking place. So if somebody offer a new tax regime, what happens is this saving culture itself will get negative. So it may not even be there in the young or the employees when they are starting. And today's world, and everybody spend a lot of money, so the saving culture may not be even there if the tax saving investments are not there. The second thing is, in the private sector, and for that matter, even in the public sector now, the pension is not there, right? So even even in a private sector, the awareness of NPS is so low, and again, and this will lead to an absence of an income chasing solution with nothing but a pension at the time of retirement. The third is about the health insurance. I have at least 2 or 3 slides on this, and the health cost is the most daring item in anybody's life. Um, the cost of medical treatment and other things are spiraling up. Probably this is the largest inflationary component in anybody's life. Okay, and the cost of mediclaims also is going up substantially high. So somewhere, whether it is through a GMC or an individual solution, because there is a lot of innovative products has come. This has to be there in this system. How this is getting done in the system, I know, everybody cannot afford a GMC, but what are the other alternative? But ensure that we must have a health insurance solution in every company. Absence of income replacement plan. This is again, I'm talking about the pension itself. Okay, so if an employee who is crossing over 40, 45, and probably next 5-10 years is getting into the retirement, how do we replace the salary? So this lot of education, lot of awareness is required. Thankfully, we have a lot of innovative solutions, fantastic solutions are available. Okay, the financial literacy also is increasing. But then this is a very, very important topic that HR should cover, probably in the middle age and the pre-retirement phase. Probably this could be a new subject for many of you. Is the employer-employee investment solution. Very tactical one, a lot of strategic value for this. Okay, as an employer, we can sponsor a lot of investments for our key employees. Okay, and this will bring in substantial savings for the employees, and it's also bring in savings for the employer also, because the amount which is invested for the employee will be availed, the tax benefit will be availed because the profit will be lesser to that extent. Employee will not be receiving this as a primary income, so in his tax declaration it will not be there. So both sides there is tax benefit. Employer also have the control in terms of assigning this policy or this investment to the employee with a definitive terms, after 5 years, after 10 years, or just like how we are giving these jobs. So it's a very, very important talent retention strategy. This also meet a lot of social security objective, because these are the products which will be either it will be a long-term saving solution, or it could be a pension, it could be even a mediclaim solutions. Okay, so by giving this, lot of objectives can be met. On one side, we are meeting all this benefits for the employees. He will be rewarded extra, and his long-term solutions also been taken care. And on the other side, the company also is saving. I'll show you a small Excel sheet, how a small example on this. And the next chapter is the health insurance. Okay. Now, I'm just reading here the drawbacks of existing mediclaims. Okay, on the benefits of why a mediclaim is required, or a health insurance is required, everybody knows. That's why you, me, everybody is subscribed for a mediclaim. Okay? Please understand these are the problems or negative aspects of the current mediclaim products in India. All the products which is offered in India is a 1-year contract. Means next year it is totally a new solution for you. There may be continuity, but obviously the prices are high. Okay? But essentially it's a 1-year service contract. There is no fixed cost solution in India. Means every year the prices keep increasing due to inflationary thing or even due to our age bracket jumps. There is no limited pay. See, my age is 30 and I'm subscribing to a solution and I may live up to 75, 80 or 85. Okay, up to age 55, I can pay because I am an earning member. But post 55, how do I meet this expenditure? Okay. So there is no limited pay solution is available in India today because it's a 1-year contract. There is no return on this investment other than the that tax saving which we have in Section 80D. Even if you pay for 50 years and no claim also, we don't get back anything. Okay. And on top of this, there are a lot of renewal issues. Renewal issues in the sense, at times, some of the products will be changing. Same product may not be available. And you will be asked to migrate to another product. Okay. And even after some time, an extraordinary situation where there a very large claim comes, renewal also can be at question mark in certain cases. So it's not something which is very 100% safe that as you generally think. Another important thing is, say at the age of 30, I would have taken a 5 lakh rupee or a 10 lakh rupee. And you know how the medical hospitalization cost is increasing. At the age of 60, the same treatment may cost me 20 lakh rupees. Okay? But my medical will continue to be 5 and 10 lakh rupee only. Okay? And a lot of entry barriers. Okay? And for your general knowledge, for a 10 lakh rupee mediclaim, an individual will end up by spending 30 to 35 lakh rupees as a total cost of insurance paid during his lifespan. I have a chart, I will explain on to that. Okay. And why I am giving this in detail, because there is a lot of new solutions which has come. If somebody has to plan it separately, there has to be a separate planning for this, so that otherwise it will become very, 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 difficult situation later. Now, this is a very, what is a good eye opener for all of us, how the cost of mediclaim is impacting us. Okay. So as you see here, the total cost of this gentleman or a lady from an age 26 to 85, only for a mediclaim is around 35 lakh rupees for a 10 lakh rupees coverage. This is an existing chart of a particular leading health insurance company. Okay. And the most important part here is, you see the 27 lakh rupees is spent post-retirement. An average cost of this mediclaim, if you average it out for the entire 85, up to age 85, it is 80,000 rupees per year. When we start, it doesn't pinch us, or is because the cost is less, we are also earning member. So you see on the left-hand side, from 26 to 40, the average cost is just 15,000 rupees. Started from 13,000 rupees and then ended at the from age 4, still we are working, we can afford. The cost is 27,000 rupees, still manageable. But you look at on the third bucket, where we are retired, and how the cost is spiraling up. From age 55 to 70, it is costing 60,000 rupees. And age 71 to 85, it is costing a whopping 1 lakh rupee plus. Okay. Now, that's why I said, we need to plan it in such a way that the when the post-retirement, we need a solution, and not much of tax outgo. Money outgo is not going to take place where I don't have the income. So this is there are new solutions which has come. So you can consult your financial planners. There are new solutions, there are top-up solutions, there are fixed cost products which has started coming in India. So I'm just summarizing the same point on the section, say health insurance. Okay, generally people will start with the two objectives to have a simple mediclaim and the section 80D saving. Okay, but we must understand the long-term impact of claim cost, which is that chart which I mentioned. And second is the threat of non-availability and the entry barriers. It's a very important thing. The non-availability is very, very important part, because at least 10-15 products are withdrawn from the market in the last 3 years itself, popular products. Okay? So when we go for renewal, we have to take a new product. It can be costly. The old product was customer friendly. That is probably the reason that company would have withdrawn from the market. Okay? Third issue is the cost escalation. A treatment which is costing 5 lakh rupee. Okay, when I am young, I may not require that, but then I am old, that same thing may cost, instead of 5 lakh rupees, it may cost even 20 or 25 lakh rupees, which my medical may not cover. So fixed cost solutions and need of the hour in every organization, I would say, I'm sure most of the organization cannot afford more than 5-10 lakh rupees of medical because it's so costly. So you must encourage your team members to add top-up solutions, so that any bill which is exceeding 10 to 20 lakh rupees, nobody is getting bothered. So these are highly cost-effective solutions. Even for a 25 lakh rupees, it will not cost more than 3,000 to 5,000 rupees. So once you have that, then your loading on your GMC will reduce substantially. Another most important thing is the fixed cost product. Yeah, there are one company which has got an approval today. It has got a fixed cost, and it has got a limited pay. And as also, this also will create a very large wallet in terms of any extra medical bill arises. Okay. So the same points I'm just summarizing once again. In a normal journey, we tend to spend up to 35 lakh rupees. And in the 25 lakh rupees, we will be spending post-retirement. Okay. And no return for our investments. And even, an ECS is not available for a regular pay in health insurance. That is even more a difficult thing. It's chances of lapse is very high. So what is actually the new age solutions which is offering in Mediclaim? One is the top-up solution, which I highlighted in the previous slide. Okay. There is another most important thing which has come up, very recently, which has come is a fixed cost solution. So from the start to end, you will pay only same price. Okay. You can also opt for a limited pay. You can pay only for 20 years or 25 years, or pay up to 60 and then have the coverage for up to retirement. I mean, up to 100 years also is possible. Okay. It's also bringing a good wallet so that your money is not wasted. So the money will be coming back to you, or it will come back even with a higher growth. Okay. And this also will help you in terms of reducing your GMC cost, because over a period of time, we will not have a demand for a higher and higher sum insured in your GMC. And this product also can be offered through an employer-employee solution. I'm sure many of the people will have a lot of query on this particular solution. So I thought of giving a sample here. Okay, here I taken a sample of a gentleman whose age is 26, and he need a health insurance coverage up to age 85, okay? Almost 60 years of health insurance. And you look at here, he is paying only for 20 years. That is 26 to 45. Okay. What is actually he's paying? He's paying little less than 40,000 rupees, 39,000 rupees. So 20 years is 8 lakh rupees is what is he paying, and the entire amount he can claim in Section 80D. Okay. So he has 3 benefits which is listed here. If he happen to get admitted into hospital, he get a 10,000 rupee benefit a day. Okay. And if it is any surgery, is there 2 lakh rupees benefit. If any critical illness identification, not even a surgery, critical illness is identified, another 2 lakh rupees is paid. Total around 5.5 lakh rupees. Plus other fringe benefits like the OPD benefits and other things are there. But basically, it is a 5.5 lakh rupees annual health insurance coverage, and he is paying only for 20 years, and up to age 85 this solution is fixed and there is no change for it. Okay. Now comes to the second part. I said it also has a built-in wallet. By the time he retire, that is at the age of 55, the wallet will be in the range of 25 lakh to 43 lakh rupees or 45 rupees. Okay. Even if you're taking a moderate 14% growth, though the funds, most of the funds are given a 20% growth. Okay. At the time of exactly the retirement of age of 60, he will have almost 80 lakh rupees in his wallet. So any amount of medical expenditure will be paid from this. This is also a cashless facility. It is the MediAssist is the TP for this product. So here, if you look at in a summary, like we end up by paying only 8 lakh rupees during our earning period. Okay, up to here in this case, up to 45 age, he will pay. He has a mediclaim till age 85. He will not be paying 1 rupee beyond his pre-retirement phase in this case. Okay. Suppose if the cost is high, he can opt up to pay up to age 55 or 60, and the cost will be probably half of it. But the best part is the kind of purpose is getting created. The wallet it is getting created. Now, if our employees are encouraged to take similar solutions, okay, our health insurance GMC costs will, I know that will not become a very big concern. People will start opting out from that. Okay. And on the other side, as a social impact, all our team members will be well protected till, as long as this can be taken up to even age 100. Right. Now coming to the tax-free pension solutions. Okay. And I'm going a little fast because I have hardly 30-35 minutes to explain all these slides. So on tax-free pension solutions, I don't know how many of you are aware that pension in this country is taxable. Okay. Any pension from anywhere. The pension can be only taken from any life insurance company. From nowhere else you can buy a pension. Any pension you are buying is taxable. Okay. So if you are at post-retirement also, with your income, you are 30% taxable bracket, entire your pension also will get taxed at 30%. Okay. So it's very important that we make a planning in such a way that our pension will become a tax-free. Okay. And there are solutions available. Only thing we need to plan it in advance. So most of the people by default, what they do post-retirement, by using the whatever the corpus what we are getting from the PF for gratuity and other things, go to a consultant like us, and then we don't have any other option but to advise an annuity, and that annuity will become a taxable item. But there is 100% tax-free solution is available. Is available now, not tomorrow. Okay, and government also is axing almost every tax-free solutions. Earlier, plenty of solutions were available. Now, only very few are available. But please understand, you have an option to save 30% of your income itself. Okay, and if you to understand this and plan this in advance, things will be much beneficial to them. Another important topic on to the pension is the advantages of NPS. I would say this is one of the most revolutionary subject for all HR team in this forum to understand and probably to take the best possible steps in implementing in every organization. This is a government supported scheme. It's a PFRDA scheme, more or less a guaranteed scheme. And I would say this is a triple E scheme. Okay, only a very small portion of it is getting taxed, and that is also government is mindful, it is reducing it. So I would say, like today's encouragement for NPS is unprecedented. It's one of the lowest cost financial instrument available for all of us. Plenty of tax benefit has been offered, and I think you should encourage. And I know many of the distributors or service providers, including your banker, won't be supporting this because there is no fees involved, and don't blame them. But then I think there are participants do support as part of their agreements with their principal agencies. So you can act, and you must do a lot of awareness program for NPS. Okay. Now on the NPS, I'm taking 2 more minutes. NPS is also a Section 80C product. Okay. So by activating NPS, you have both the sessions are covered. Mostly people invest into NPS only to take care of the Section 80 CCD, that 50,000 rupee extra benefit. Okay. And 9 out of 10 cases what we attend is on Section 80 CCD product. Okay. That 50,000 is allowed. So that is what actually most of the people invest. But Section 80C also 1.5 lakh also you can use your NPS. Plus the employer also save some tax. 10% of the NPS contribution, that is a 10% of your basic plus DA contribution is also exempted. That is also a big saving for the employer. So tax benefit, both employer and employee. It is a triple E product. Why I'm saying it? So earlier the construct was 40-60 only. You can withdraw 40% and 60% has to be a mandated annuity. Now the government has reversed that. The 60% is absolutely tax-free. You can withdraw lump sum or you can withdraw on a monthly mode, but it is completely tax-free. Only 40% is actually now is compulsory. You have to buy an annuity, and that is a taxable pension. That is a future income. But that 40% amount is not taxed. It is practically a triple E product, and I'm sure 5 year, 10 year down the line, that 40% also government will reduce to make it more attractive. Okay, and most important thing is a PFRDA scheme. You don't have to take the ownership of this. I mean, there's a government body which is regulating very, very tough regulation. I'm managing quite a few, PF entities also. The regulation is so tough. So government has put the structure in such a way that the so-called 8% return is actually delivered, and nobody will be taking very, very high risky proposition in their investment. Okay. And today's NPSs come with a huge diversification. There are 4 or 5 categories of product. Based on the age, you can choose it. You can automate your investment. And this is also a payroll-based deduction in NPS is available. So the NPS is something which is very, very important. And through this, both your tax compliance is already taken care. And as a social cause, this will automatically build a pension for your team members also. So the NPS is something which I would request all of you to give a lot of encouragement in your system in terms of awareness, building the adequate knowledge among the employees. Okay, the pros and cons once they understand, I'm sure they all will take forward. So the corporate empanelment is available, payroll reduction is available. So something which require help, you can reach up to us also, will help. Okay, so for me, a penny saved is a penny plus earned. Okay, because your capital should not get eroded with anything else. Okay, even with the loss or even with the taxation. The taxation is even more important. Okay, so you need to understand or plan your investments, both the tax saving investments and other investment, in such a way that the tax outgo is nil or minimal or near nil. Okay, so there is ways and means. We don't have to do any wrong routes. There is plenty of products are available where your tax outgo can be minimized. Okay, Section 80C and other things which is limited. So your income, your primary income, it's got limitation. On the other side, the growth, the return earned, you need not pay tax, and they are very critical because most of our investments, including tax saving investments, we are doing for our second term of the retirement life. Okay, second innings or the holidays. So there, whatever we are saving now is become very significant. With that, I think I completed my slides. I'll just share one or two Excel slides. So I did mention about an employer-employee investment solution. So an employer can sponsor a mediclaim product, which I highlighted in my slide. The employer can sponsor and hand over to the employee at the time of his leaving. After that, the employee can pay. The employer also can sponsor as pension type of products. Employer also can sponsor the investment type of products like ULIPs. Okay, so a lot of benefits is today available. I do not know these things. The way it is going will be available tomorrow. So let's take a sample here. I'm referring about a private limited company where to a director or a senior management some the payment components. So when you're paying a salary to the employee or to the director or to the senior management, the company doesn't make any tax onto it because it's treated as an expenditure. It goes right, and the employee received it in his hand, and the maximum tax bracket today 35%, 36%. So he will pay 36% tax on it. The same thing. Some companies do pay it as a dividend based on the profitability the company makes. Now, what happened is now there is a component called DDT, dividend distribution tax. That's a 25% plus surcharge will become 25.1%, and the amount is received by the person. His tax bracket is at 35%. So total 61% is the tax. Now the same benefit, if it route through an employer-employee investment product. Okay, what happens is the tax paid by the company is nil because this has been treated as an expenditure for them. Okay, unlike a dividend where DDT is applicable, that is not applicable here. Okay, since the employee is not taking that money in his hand, okay, in the ITR this doesn't reflect. Okay, so the taxable income for that particular year is nil. And if he has subscribed a product which is actually producing only an annual income at 10, 20, 30 years later, again, the tax matter doesn't appear during his working time. Only when he is retired, at that time only the income will hit the book. That time, based on the marginal tax rate, income will be taxable. Okay, even during has been assigned to the employee. In between, the product has been assigned to the employee. That time, based on the surrender value, only the tax is applicable. It will be much lesser than what actually originally the amount involved. Okay, so it's a huge saving. I mean, if I put it, 10 lakh per annum, you will, I'm talking about more than 1 crore of investment. Your savings are quite enormous because your initial investment it just goes as 100%. There is no tax impact is coming, so 100% itself is growing. Okay, and the company also saving tax onto this. And on old and new slab, I just wanted because this will be a topic for all of you to deliberate in your companies. Okay, as far as possible, make people understand by choosing new regime, life will be simpler, but then without savings, it will be really damaging one. Okay, so where people understand the financial planning, encourage them, okay, and create liquidity. So if you want an ease of running the business, you opt a new regime because up to 10-15 lakh, the new regime works out good. And those employees who have a housing loan, okay, don't have any other option but to go with a new regime, because there a lot of exemptions are additionally allowed, because 2 lakh rupees interest on the housing loan will come as an additional benefit there. So you have to go with the older regime only in case of housing loan. Okay. So these are the slides which I thought of sharing. And section 8 is you have a lot of products. This is what normally the program is conducted in various organizations. Okay. And here I just wanted to highlight in section 80C also you have a fixed income based product as well as equity product. Okay. So equity product is your ELSS tax saver, which has got a 3-year lock-in. And if somebody want to put money into FD and take a tax saving, that is also possible. Only thing you have to lock in for 5 years. Okay. So the equity product will be a triple E, and your FD will become single E. Okay. Another important thing is an FD employee need to invest only for 3 years. 4th, 5th, 6th year or 7th year, 8th year, he did not make any fresh investment. The first year what he has invested, which is completed the lock-in period, the same thing is applicable as of the 4th year. Okay. So please educate this to all your employees. Most of the people, what we are seeing in real life is this investment is continuing forever. Okay. Actually, we need to invest only maximum for 3 years or maybe 3.5 years. And your initial investment, you can convert into the 4th years of tax declaration. Very simple thing. Okay. So this also has to be educated to your employees so that, they will not have unnecessary fear about this lock-in part. Right. That's all about the slides which I thought I will present because the time is very short for me, and I hope I could cover most of the points. Raki, I think I could cover it, and I would like to open it for any Q&A so that I can answer it.
Yeah. Definitely. Thank you so much, Raju, for that enlightening presentation. There were a lot of helpful points that you shared for all of us, and I'm sure everybody would agree with me on that.
Yeah.
Because the questions are already lining, we'll not wait and just start with the questions right away. So the first question is, there could be a few questions which we might have already addressed during the presentation. But if you would like to, just maybe shed a light or two on that, you can please do that. Okay, so the first question is, can you cover ATDD and ATDDB? Can caretaker expenses be covered under ATDDB?
Okay, I may have to come back on to this, not very clear to me as well.
No problem. Okay, moving on to the next question from Venu. What income is exempted under Section 10 of the income tax?
See, 1010D is basically, let's take a life insurance investment. Okay, so any investment in life insurance is tax-free, provided there is a minimum 10 times coverage of the annual payment. So somebody is investing a lakh rupee a year, and if that product has got a built-in minimum coverage of 10 times, then the entire proceed from that investment is tax-free. Okay, so it's a very powerful exemption. And only thing it's if you're buying an annuity, there is no life component. That's why that entire income is coming taxable. Wherein most of the life insurance product where 10 times coverage is provided, so your entire income will become tax exempted.
Okay.
So in ULIP also, when you are taking ULIPs, you have to be mindful on this subject. Again, there should be a 10 times coverage, and it will not impact your return. Okay, and your tax benefit will be there for throughout.
Sure. I hope that answers the question for you, Vinu. Moving on to the next one from Guru Das. The question is, dear sir, how to introduce NPS tax benefit on employer contribution? For example, one employee's monthly gross salary is rupees 2,25,000. He wants employer to deduct the NPS from his gross salary so that the take-home salary is reduced. how he can start, how he can
So
approach this.
the first criteria is what is actually allowed for the employer in terms of tax benefits. That's a 10% of your basic and DA. So let's limit there. Remaining things do not have an extra benefit. So 10% of basic and DA is what actually the thumb rule.
Thank you. Moving on to the next question from Hari. So the house is on my wife's name. Can I still go with the HRA exemption?
House is in wife name and still go for an exam. I think it is yes, allowed.
Okay. Moving on to the next question from Nagaraj. How the tax saved in new tax regime or tax saving investments for the new tax regime?
So the new
How
tax
the
regime.
tax is saved? Yes.
Yeah. So the new tax regime do not have any exemptions. Okay. The only exemption is NPS is an allowed exemption in that. I can show that chart, or rather I can mail it also. So in the new tax regime, there are no deductions actually or exemptions except one or two component like NPS. So the new tax regime, it is a simple tax deducted at source based on your income bracket. In the old tax regime, lot of exemption tax and other things are there. Then you need to arrive what will be your taxable income. So in a new regime, it is nothing but your gross income minus the basic deduction is your taxable income.
Got it. Okay. Next question is from Kavita. Can you please elaborate on the 5-year lock-in period of fixed deposit? What happens after 3 years?
Right. So the FD also is allowed in Section 80C. Okay. So a 5-year FD which is locked is you can claim it for your Section 80C investment. So there you have the obvious benefit. The first is allowed, which is your investment amount is exempted from your taxable income for that particular financial year. But the entire interest earned in the 5 years, it is added to your taxable income. So the second E is not applicable. The growth what it on your initial investment of this 1.5 lakh rupee will get taxed every year. And when you're withdrawing it also, the same thing happens.
Okay. Next
Okay.
question
So
is
there
from
is no
Rupa.
3-year lock-in in this. It is a minimum 5-year lock-in for an FD. If it is an equity-based product, it is a 3-year lock-in.
Okay. Okay. Thank you for that. Next question is from Rupa. Please suggest if the employee has the annual salary below 10 lakh, which regime is beneficial for that employee?
Very tricky one. I mean, the easier answer is to go for a new regime. You will not pay any tax. Okay. And that's why I said, the social impact has to be, from an HR strategy point of view, it has to be mindful. So if you are ensuring the, employees start some investments, early investment as through regular savings, I think the old new regime is the best. Okay. Or, otherwise, and if you take about an old regime, at least somewhere he would have made some investment. So it will pay off in a later time. Otherwise, it's a simple answer. New regime is the best solution. Up to probably 12-15 lakh rupees is a new solution. Is the new regime is the best solution.
Okay. Next question is, what could be the best savings plan for a 8 lakh annual salary holder? And what is the best time to invest?
There's nothing called as a best time that I can categorically say, because let's take next 10 years of investment, which monthly, if you are making, it is 120 installments. So how much ever you plan, not even 1% you can plan it as a best time. Okay. The best time is today. Make a start, do a monthly investment. Okay. Choose a product which will suit your risk appetite. And I'm sure if you invest in anything for 10 years through a monthly systematic investment, you will make money out of it.
Next question is from Raghavendra. He needs to know more about ESOP's shares redeemed at the time of leaving the company. Is there any tax which is deducted by the employer?
Obviously, at the time of vesting, the benefit will get added. So that capital gain will be, taxable.
Next question is from Bharat. If you could share any benefits for donation investments, let's call
So
it investments.
Section 80G also allowed. Okay, so you have to ensure that, where you are donating, you get the certificate. So you have to declare your PAN. So Section 80G, donations are allowed, and you can claim under the taxation.
Next question is from Hari. If I choose new regime in current financial year, can I switch to old regime in next financial year?
Yes, I forgot. Yes, you can. Being a salaried employee, so, you can always switch in, switch out from the new to old regime or old to new regime.
There's another question from Rupa. Sir, can we invest more than one pension scheme for tax savings?
100% yes. You have, I forgot again, you have tier 1 and tier 2. Only in tier 1, you have the tax benefit. Tier 2 is an open-ended fund for you, and there is no limit. The limit is only for your tax exemption, which is a 50,000 rupees in a year. Otherwise, there is no limit. You can invest as much as you want.
Okay. There's a follow-up question to that. What kind of a mutual fund can we invest for tax savings?
So it's basically a tax saver funds. Tax saver funds in general are doing pretty good, because mostly these are a 3-year lock-in fund manager get, and he can take a long-term call. So all the tax saver funds, the top 5-6 funds, if you look at the annual CAGR for the last 10, 15, 5, 20 years, is in excess of 17 to 21%. Okay, so you go with any of the top branded companies product, all are doing good, whether it is ICICI or HDFC or SBI, Birla or Nippon, all are doing exceedingly good. So all you have to do is, instead of putting into one scheme, you put into different scheme. Choose, if you are investing say 10,000, you can always choose 2,000 into 5 different scheme and 5 different dates. Okay, which in general most of the advisors won't give attention. So you can choose 5, 10, 15, 20, 25 as your SIP dates, instead of bunching everything into the first week.
I know this is already it's already 5 p.m. We'll just take a few more questions and we'll wrap it the session ASAP. Also, if there are any questions you have, and these are not covered in the session today, please feel free to connect with Mr. Raju. His both phone numbers, his email ID is visible on screen. You can note it down right now. After the session is done, we will also be sharing his email ID with you by next week with this session's recording. So you can always go watch it again. And yeah, that was that. Let me quickly move on to the next question, which is from Hari. So we pay telephone and internet reimbursement to our employees. Is that taxable or not?
Telephone, so I think there is something on the fringe benefit tax has already been clarified. I think that will become a taxable benefit, right? And earlier it was exempted. I think now it is a taxable benefit.
There's another
the telephone bill,
question.
the travel, it will become obviously a reimbursement. The telephone mobile bill, I think it comes under the FBT.
Okay. Next question. Venkataraman. There are 2 questions. So first is NPS premature withdrawal or not? Yeah,
it's a premature, you have slabs. So you can, suppose if your corpus is below 5 lakh rupee, I think you don't have any restrictions. Otherwise, 20% you can withdraw, and that is not taxable. Otherwise, your withdrawals start only after age 60.
Okay. Next question is, I think this was during when you were talking about FD. You meant FD single E, and while withdrawal is taxable, I guess only interest is taxable. Is that correct?
Correct. So I was just giving a comparison between an FD and a mutual fund. Okay. So an FD, let's take 1 lakh rupees invested into an FD and 1 lakh rupees invested into a mutual fund. Okay. And both are earning a 10% every year. So what happens is, in mutual fund, during the entire 3 years of growth is exempted. And when you are withdrawing also, it is completely tax-free. Okay. So what happened in FD, during that period of growth, every year that interest which is realized, you have a TDS and you have to record at your income. Okay. And the last year when you are withdrawing it, so that year also whatever earned, that year's interest also is taxable income. So that's why I said it's a single A profit.
Okay.
Entire gain is taxed.
Got it. We'll just take a couple of more questions. So Kavita is asking, when we file our individual ITR, can we switch regimes at that time?
Yes, you can. If you're a salaried employee, you can. You don't have to declare in advance and then do it.
Okay. There's a similar question by Aruna. I think you did answer this before also. If an employee selected new regime by mistake, can he change during the year to old regime?
You can switch.
Okay. So there's a question from Prachi. Is meal coupon and gift coupon under tax exemption or not?
I'm not very clear on that. Probably I had to consult once again on it.
No problem. Prachi, you can see Mr. Raju's email ID and phone number. I suggest you can connect with him directly and take this advice. Okay, we'll just take one last question. So my salary slip contains heads like vehicle reimbursement, professional development reimbursement, etc. I do not submit any bills and get the money actually reimbursed, but the amount comes as a salary. While submitting proofs, will my fuel bills be considered for exemption?
Looks a little complicated. But your salary slip, vehicle reimbursement. So if it is a reimbursement, it is done on a bill. So after that, it cannot get into any tax.
Okay, got it. So I think we have covered pretty much all the questions. There are some comments for you from Bharat, from Rupa, saying thank you for this good time session. Helped a lot.
Thank you
Also, yes, I think we are done with the questions. If there are any more questions, apart from this, any other time also you want to connect on tax saving, personal finance, you can connect with Mr. Raju. And before we end the session, thank you so much, everybody, for being here with us till the very end. I just have a poll question for all of you to understand your feedback as well. And I would request all of you to participate, which would help us, make this session, make these sessions more interesting and beneficial for you all. So there are 3 questions. You can select how would you rate the overall quality of today's webinar? How likely are you to recommend this webinar to a friend or colleague? And would you be interested in attending similar webinars in the future? So we have over 100 participants still with us till the very end. So would request all of you to participate. And thank you so much once again, Mr. Raju, for this wonderful session today. It certainly helped us a lot. There were great insights that you shared with all the questions also that you took. And the attendees as well, as I always say, no session is successful until you guys make it. So thank you so much for taking out the time on a Thursday evening to attend our webinar, Parichay. And we have lots more coming up. Interesting, insightful conversations on Parichay, on Great Tribe community, on our Great FM podcast as well. So keep a watch out and keep interacting with us. If you're not aware of what Great Tribe community is, it's a knowledge sharing platform where experts like Raju can guide you with your queries related to HR, taxation, compliance. So you can register and start the conversation there as well. Can we go to the next slide, please? So we also have a WhatsApp channel. If you want to connect with us directly on WhatsApp, you can do that. If you want to understand any questions, any queries you may have related to greytHR as a product, you can scan this QR code and connect with us there. So I think we have 75 participation for this poll. Again, I would request, in fact, the 25% remaining people to please, click on the choices that you feel is more relevant, which you resonate with the most. And this would certainly help us improve the sessions ahead. Okay, as promised, also, if this is a recorded session, so the recording will be there on YouTube and it will be sent to you on your email ID. So you can always watch this session again. If you have any questions related to anything, greytHR or this session today, you can write to me at rakigautam@greytip.com and I will get back to you. Mr. Raju's email ID will be shared with you once again. So thank you so much, everybody, for joining us. Thank you so much, Mr. Raju, once again, for this insightful presentation that you gave us today. And yes, have a very good evening, everybody. Thank you so much.
Thank you, Raki. Thank you all. Have a great evening.
Thank you so much.